The GraceKennedy Group experienced a 15% drop in profits for the 9-month period ended September 30, 2010. However, group officials at a mid-November investor briefing were optimistic about future growth prospects, and today, as a special feature for investors, we highlight excerpts from that briefing. I asked GraceKennedy's chairman Douglas Orain how he viewed the medium-term prospects for the Jamaican economy and, by extension, his company's prospects.
Well, I'm actually very optimistic about the medium term because I believe that the changes we have made as a people augurs well for the future. And I'll point to two. The first one is the Jamaica debt exchange. Up to a year ago, could you ever imagine that interest rates would have dropped by a third or more? If you ever raised that with people, I said, well, I can't say what's happened. It's possible because we have been on this track for decades, and yet we as a people said, you know, we're going to change, and in 4 weeks we changed it as a country, and we're vastly better off as a result. The second one I'd point to is what we as a society are doing about crime. If you had said a year ago that the murder rate would fall dramatically by a half, people would say, I don't see how that's possible. And yet we have managed to do it because we as a society have said we're not willing to live that way anymore. We made a decision to invest backward integration into contract farming with contract farmers to store large amounts of peppers in the pepper mash form as well as scallion and all the ingredients. Before it was on an ad hoc basis. So now that we have been hit by a tropical storm, we're fine. It doesn't affect our service levels at all. In fact, they're increasing. And as a result of that, we're able to supply the Grace sauces to Tesco in the UK, Loblaws in Canada, Walmart in the United States without any interruption. That was not the case up to 18 months ago. So what I would say this recession and coming out of it is all about is individual companies making individual decisions to invest in a way that makes us stronger and able to plug into the global economy. That's what we need to be doing at this time.
GraceKennedy spent $31 million to build a huge distribution center in St. Catherine, and as Chief Operating Officer Don Webby reveals, much is anticipated from this facility.
We have made quite a bit of investments in terms of physical infrastructure. As you'll recall, we reported that we have built a new logistics distribution center at a cost of US $31 million, and we are already seeing benefits from that investment. And going forward, we expect to see increasing efficiency coming out of our food distribution business, having invested US $31 million. Also, we are investing US $6 million in FlexCube Oracle, a banking software system, which we believe will transform the experience of our customers and the efficiency of both First Global Bank and First Global Financial Group.
Webby also listed other initiatives, including a new high-low store in Portmore, from which growth is anticipated.
Please visit us at our new Portmore store. We expect that store to do exceptionally well, given the buoyancy of Portmore. Also, in April, we opened our new GK Financial Group in Montego Bay, with our financial services companies under one roof: First Global Financial Services, First Global Bank, Allied, and JIC. And what I can say to my colleagues here is that we have seen significant improvements in terms of the performance of the financial group in the West, in Montego Bay, having invested in that new structure.
Webby also noted that losses in subsidiary hardware and lumber have been stemmed.
We have seen significant improvements in terms of the performance of that company year over year. For the 9 months to 30th of September 2009, the company lost $262 million. We have reported a loss of $20.5 million, so that's an improvement of $242 million. What I'd also say is that the last quarter in the retail business is known to be our strongest quarter, and we expect a very strong quarter from hardware and lumber for the last quarter of this year.
GK Foods reeled under the impact of recessionary conditions. Andrew Ho, who deputized for Irving Burton at the investor briefing, spoke about the UK and Caribbean operations and prospects for growth.
Most of our markets continue to suffer from the recessionary impact. We noticed this particularly in our Caribbean markets, Jamaica, Antigua, St. Lucia, and the Cayman Islands. Interestingly, we have seen good growth in the U.S. market, and we had a very brisk first 2 quarters of the year. We're noticing a little slowdown right now, and we continue to not have corned beef in that market. With regards to the UK business, the food service continues to face challenges with the pub and restaurant trade down, but there are encouraging signs with the other 2 branded companies, and the performance this year has been much improved compared to the same period last year. The key objective for that company now is to aggressively grow the revenue line, and the team there have been rolling out plans to do this.
Who projects more success for GK Foods' Canadian operations?
This year has been one of the best years for our Canadian subsidiary as the Canadian economy bounces back out of recession, and we expect to see even better results for next year. One of the key initiatives for that company is to transform it from mainly a distribution company into one that is market-led and focused on growing the Grace-owned brands.
Courtney Campbell, head of GK Investments, the umbrella organization for GraceKennedy's financial companies, is cautiously optimistic about the prospects for the banking and insurance companies.
For the future, in First Global Bank, we continue to focus on the medium enterprise segment, and we're saying to business customers out there, we want to play our part in stimulating economic growth. And we're saying to entrepreneurs, if you have good business plans, please take them to share with the officers at First Global Bank. We'll look at our proposals and give you our feedback. The electronic banking solutions continue to be very important there. Earlier this year, we launched Global Access, which we believe is Jamaica's most robust internet banking solution. And so far, we're getting really good responses from our customers. We have a high penetration rate of up to 39% of our customers are now registered for Global Access and using it to do transactions such as wire transfers, ACH payments, and so on. In First Global Financial Services, we are now focusing that business on portfolio management, and we have 2 flagship products there: the managed asset portfolio and the preferred portfolio. Those are both recording significant growth since this year, and we will continue to build our competencies in that area. So we expect accelerated growth actually in 2011. In our insurance business, the entire industry has not been generating underwriting profits in recent years, primarily due to a heavy reliance on investment income. Well, the JDX has changed all that, but we are pleased that in GIC we're having a reasonably good year, because in the core operating business our premium income is actually up 13%, and our underwriting position has also improved. In that business we're now focused on improving our operating efficiency. So we are doing re-engineering in some key processes in our claims process and our underwriting process. And of course, there are some target segments that have been identified, and we're expecting to build market share there. We're pretty confident that we'll realize our objectives. Allied Insurance Brokers continues to do well, winning important corporate relationships. Our revenue up double-digit, and our net profit after tax in that business is up 17% over last year. We're building a pretty good employee benefits business in Allied, and we expect that growth will continue into 2011.
Campbell also noted a significant improvement in the money services segment.
Very happy to report to you there that our transaction volumes are up 13% for the first 9 months of this year over 2009. The national figures, we believe, are indicating a growth of in the order of about 7%. So, that would indicate to us that we're actually gaining in market share there, and that's a process that started from last year. In that business, we're building customer loyalty. We recently introduced a new program, a new loyalty card, the FX Trader card, that will be adding the Bill Express brand to that program early in 2011.
That concludes excerpts from GraceKennedy Group's investor briefing on November 15, 2010. For Your Wealth, I'm Owen James.